Hi everyone, and welcome to this afternoon's session. Sorry, I'm looking at another screen, so I got completely sidetracked there. I do beg your pardon. Right. Thank you for your patience. We have started a few minutes later than anticipated. We were just sorting out as usual, our headsets, but they all seem to be working just fine now. But before we go and look at some charts for this afternoon session, can I just draw your attention to the disclaimer that I know you can see on your screen. I don't know whether you heard that, but it's just one of my alerts going off in my ear. I hope it didn't. I hope you didn't hear it, but anyway. The disclaimer that's on your screen. Trading can be a very risky business. Please don't ever think of using money that you cannot afford to lose. And just very quickly, for the benefits of those of you who are perhaps coming along for the first time today, and I've just realized I've actually got the wrong slide up. I am so sorry. This is from this morning's. I don't know quite how that happened, but there we are. Forget the bit about, we will be looking at Forex, but we're actually going to be looking at the markets through the prism of volume price analysis. And I normally have the complete guide to the book, The Complete Guide to Volume Price Analysis, up on the slide. So I think we're just going to stop there. I've got the wrong slide up. I'm not going to bring the other slides up. All they are is just a couple of slides with the book, with a companion book. The companion book is a compilation of worked examples of this fantastic methodology that David and I have been using and have developed over the last 20 years. And what we do, we look at the charts, we see price action. Let me just bring up a chart where you can actually see it in action. Right, what we're looking at here, we're looking at the 4-minute chart of the YM. Horrible racking about of the price action. Obviously, you always get volatility at the open. The volume that you see under here, because this is a 24-hour market, all the volume that bars that you see preceding the US Open, they've all been squashed down because the volume is, you read it in the context of the session in question. This is a very fast chart. So you have this surge of participation, traders joining this market, and of course these are the volume bars that are now being created. But the price action is pretty horrible. It's being racked around what we call the volume point of control. Really have to wait for it to calm down a little, and before we can see if there is a trading opportunity. David will have the slightly faster charts over on his screen. He's got Renko charts and time charts to see whether, what is the direction that this market is going to go. We know yesterday, unfortunately, yesterday was for us today, yesterday was the day. Let's just bring up the daily chart. We can see here, lovely, nice big update. Going to talk about these 3 candles here with this volume profile that we see down at the bottom. I'll leave David to do that and explain. So it's no surprise really after that big move yesterday, which I think most of it, let's just go and have a look quickly at the hourly chart. And I just want to make sure I've got enough days on my, nope, I need to put that to 100 because it affects where the lines of the Camarilla indicator appear if I don't have enough data. And this is the hourly chart. This is obviously yesterday. Now the move higher, this is where, as you can see here, this is where the US session, the physical market opened. But if you actually see the bulk of that move was actually in what we call Globex. It was overnight and it was absolutely surging higher, certainly in when London and Europe opened. And in fact, by the time the US opened, the US traders joined, didn't actually go up that much more, and in fact it kind of pulled back slightly. So my kind of sideways, can't decide which way to go, whether to carry on higher or maybe to roll over. And part of that reason is, of course, you will know today is the first day that we have the it's the first of the presidential, what do you call them, David? But no, the interviews, the discussion between Biden and Trump. It's the first time they're facing off against each other. I believe it is at 9 p.m. Eastern time, which is after the market, the physical market is closed. So any reaction will be seen in Globex, but as we saw yesterday, and actually kind of brings me to what I was talking about this morning about such session crossovers. These 24-hour markets these days, you have to treat each session in the time zone as a sort of independent market, as it were. You sometimes get a continue through of sentiment. Slightly yesterday, certainly on the YM, but not, after it did 400-500 points in Globex, it has put on another 400-500 points in the US session. But there wasn't a lot for day traders in the US who actually wait for the open of the physical market. Now here on the 4-minute chart, as I said, we had a lot of racking around. We're at what we call the volume point of control. You could describe it as it's the fulcrum of this chart. It's the kind of fair value area, and we're waiting to see whether it's actually is going to pull higher, or is it just going to go sideways and kind of try to break lower, higher, really not going in any direction with any degree of certainty, simply because of what happened yesterday and obviously what is happening later today. And just very, very quickly, just to bring up what's happening in terms of news. Well, we've had the Conference Board Consumer Confidence number that have come in. That's well over expectation. We've got a whole bunch of Fed speakers. In fact, I think we just had Kaplan. Here we are. And the important thing about Fed speakers is when they do make comments in the market, and we always make a point of explaining this in the Forex program, but it really applies to whatever you trade, whatever market you trade, is you have to be aware of where they sit along this spectrum of dove or hawk, and secondly, whether they have a vote on the FOMC or not. Clearly, if they have a vote and they are making comments, then the market is really going to pay attention to what they are saying. But as I said, we have had Kaplan, who's also a voter. We've now got Harker, and we've got, well, you can see here who they are. We've got Clarida. I think the whole of the FOMC, apart from Jay himself, is out on the stump, as it were, today. But really, the main event is this first this first television debate. That's the word I'm looking back for. The debate between Donald and Joe Biden, and how that is going to be reflected in the markets. There's a couple of things, and that is going to obviously increase volatility. And one of the ways we look at measuring volatility and uncertainty and what is happening in the market is obviously we look at the options market, and we look at the volatility indices. The one that everyone turns to is the VIX. David has that up, and he's got the charts for that. He'll explain those later. But I just want you really sort of get your head around how the options work. And basically, people trade volatility. They trade them as an instrument in themselves. They would use, price action, volume, and the indicators, whatever indicators they have or are indicators. But what the option market also does, it's a forward-looking market, and depending on what has been bought in terms of calls or puts, gives you an indication of what investors are possibly thinking is going to go ahead. Now, I've actually pulled up a couple of articles. These are, you say, well, what has this got to do with an article back in October the 25th? On October the 25th, this article was in Bloomberg, and it was really fascinating. I think I highlighted it on one of my Facebook pages and on Twitter. And it was trading in call options, absolutely you know, rocketed, and it was for the April 65 call, because what you do with options, you buy insurance. So if you've got a huge portfolio and you know you think volatility is going to come along down the line, you buy an insurance policy. So you buy calls. So if you think because when the VIX spikes higher, then we know it's really not good news for equities. It works it has an inverse relationship. But this was a particular, as I said, this is back in October. This is before any, you know, pandemic, you know, major reversal, you know, all the volatility that happened in March. So whoever it was bought these calls. And what happens is if the VIX does start to go up towards the strike price, the calls actually become more and more valuable. And at the time, people were thinking, well, you know, who is this person? What are they trying to hedge? You know, what are they trying to insure, as it were? I can't remember what someone did calculate what the size of the portfolio that they were trying to hedge or insure. So that was back in October, and I think we had the same thing here. This was someone else, but it's 4 million on a major volatility spike. This was in January, but I think the call option on this one was in February, which was just before you know, all the market volatility in equities due to the virus. So understanding what is going on in the options market, particularly to do with, as I said, the VIX, is really, really important. Each of the main indices actually has its own volatility index, which I may have mentioned before. This is the one that is, as I said, it's because the S&P 500 is, if you like, an international benchmark for sentiment. Most traders and investors look at the VIX, but the Nasdaq has its own and the Dow Jones has its own. And as I said, David's got there's some curious things going on with the VIX at the moment. So that's just the background to what is happening. We've got here, let's have a look at my YM, see what is happening. We've had all the nonsense, you know, over with, and now we just have to be a little bit patient and wait to see if there is a potential trade to take. It's obviously moved away from the volume point of view. I really don't like this. The volume is falling, but then this is all very is distorted. So you really have to see whether the volume under the candles that are being created at the moment is proportionate. You know, is it sufficient to take this price higher? We've also got quite a big resistance here at 27,473. So as I said, I just happen to have the 4-minute chart. One of the ways you can play this when you have this kind of market is, excuse me a second, that's it, sorry about, apologies, is actually to go to the faster time frames, which may seem counterintuitive because you think, well, you've got volatility, why would you look at the faster time frames? But in a way, the faster time frames, you see these lessons, you see these signals, you just get in and you get out. And it's, as I said, David has the charts over the other side. So that's my introduction of what, you know, why things are the way they are. We will look at the charts much more closely. We won't know what the market thinks of the debate between Biden and Trump, certainly until the market is over, but the reaction, you will certainly see the reaction in Globex and also in the Forex market and the individual currencies that represent risk, sentiment, and safe haven. All right, I'm going to focus on, I'm going to look at that. I'm going to look at some Forex trades for you. And may I just pass over to you, David? You've got yours up. Yeah. Are you on the YM or are you going to be on the Nasdaq? Okay, all right. I will leave that to David, and basically whatever he doesn't do, then we'll do something different, obviously. If you've got any questions, just pop them into the chat box and we're happy to answer them. I've got NinjaTrader. David has NinjaTrader as well. And we do also use MT4, MT5, and And we will soon be introducing to these sessions a TradeStation, because we are almost ready. And with TradeStation and later on with Ninja, we're going to be looking at slightly different. We're going to be introducing concepts of order flow, and also looking at time and sales and putting it together with volume price analysis. So that's something to look forward to probably in the next 3 to about 4 weeks time, David?
Yeah.
About 4 weeks time. So brilliant. I'll just pass over to David.